Good evening, everybody. My name is Kade Tyson, and I'm looking forward to going through this homework with you. As I was doing my studying and going through lots of new words and new concepts that seem to be really, really confusing. But as I just tried to simplify everything and put it in language that I understood, it became a little bit easier. So the problems we're going to be working through today are 13, 14, and 15 from chapters 1 and 12 of this week's homework assignment. I've put it here in an Excel spreadsheet for you to take a look at, and we'll kind of just go through it together. If there's any questions you have about this video, please put them in the comments, and we can look at them together. I'm not perfect at this by any means, but think I have a decent grasp. So as you can see, we've got we're going to do some accounting. We've got what the company has done, and this is a simplification of what you'll see on the assignment. And then we're going to be filling out an income statement today, a statement of retained earnings, and a balance sheet. I've put some blanks in on parts that they'll ask us to put in information, and they'll ask us to put some numbers in some spots where they already do calculations. I've already put some zeros in there. So um, jumping right in, the first thing that we'll want to look at is our income statement. Now, there's lots of numbers and lots of things over here on this left side, but we don't want to get too deep into this and start adding everything in all at once. Our income statement, as we're looking at it, is over a time period, right? Um, Not just at a single instant, but over time. So we're going to be looking at this at the month, uh, excuse me, month ending December 31st. Not just on December 31st, but that entire month. We want to see what we've done on our income. Now, there's two parts to an income statement. If you think of income, that's money coming in. And so that's the first thing we're going to want to look at, money coming in, which is another word for that is our revenue. So we're going to want to put in our revenue, and that'll be a question that you get because we want to know what's coming in. So looking at this list over here, there's lots of words and lots of different things, but there's really only one that is revenue, and it's that consulting revenue. So that'll be our first line here, looking at consulting revenue. And we'll just put that amount in right there. 13,320. So that is our first number, consulting revenue 13,320. Looking around here, I don't see any other revenue that comes in. You don't be confused by cash or accounts receivable. That's all important for our balance sheet and later, but not for just our income. We want to know what's coming in, which is our consulting revenue. Now, after we look at our income, we want to know what's going out as well. We want to know what our expenses are. Again, it's going to be really easy to look at all this stuff and say, wow, land is expensive. Office equipment, we had to pay for that, accounts payable. Keep it really, really simple for yourself. Here we have four expenses. We have a rent expense at $29.50. We have a salaries expense at $62.90. We have a telephone expense at 830, and we have a miscellaneous expense at $640. Which gives us our total expenses here of 10,710. You have another blank here wanting to know, what this is. So you can take these two and we want to take what we've earned minus what we've lost to see if we've made any money or if we've lost money. In this case, this number, just to do some simple math on my end here, is this number minus this number here. We have a positive number of 2,610. So that is our net income because we ended with income. We ended on a positive. It's going to be our net income. Now, had this been a negative number, it would have been our net loss. But because this was positive, it is our net income. Now, moving on to our statement of retained earnings. Once again, our retained earnings, I come from a banking background. So retained earnings to me, always, I'm thinking about any sort of investing in any sort of way. So this is going to be dividends going to there, as well as, how we did our income. And what I like to see is these all build on each other. So there's always going to be a number from the first one that we're going to need on our second one. Once again, we want to look at our retained earnings over a period of time. So this is going to be our month ending December 31st. It'll already give you your retained earnings December 1st. That's just at zero. There was nothing that we were provided for that, as you can see here on the left. And the first thing that we're going to add is we want to add our net income to this. We want to add our net income. So we'll take our net income that we found previously, the 2610, and we will add that right there. Then what we're going to do to get our retained earnings, we want to see what we received, but we then had to pay out to our shareholders based on everything that we earned to our shareholders, our dividends. So we're going to less out our dividends. And that was 1460 seen here on cash dividends. And that's going to give us our retained earnings as of December 31st. Sorry, that's not quite spelled right. Our retained earnings, this is our statement of retained earnings, our retained earnings as of December 31st as $1,150. So that's our statement of retained earning. We're going to take a piece, the net income, we're going to subtract the dividends, and that'll give us our retained earnings. Moving on to what may seem like the most daunting piece, but really not that different, is our balance sheet. Now, our balance sheet wants us to look at what do we have as of today. So this is going to be as of the date, which, just looking at it here, is as of December 31st is when this was all prepared. So we want to look at just a snapshot of our company. What do we have on that day? In the reading, we learned that as we're looking to balance our sheets, the equation is assets equals liabilities plus equity. So those are our three sections. It's nice just to get those three there so you know where they're at. You can feel confident knowing what you're going to be putting in here. Then we get to these numbers here. There's a few things that we've already used that we won't necessarily touch again, but if we do, we'll talk about it. But this is where we're going to be looking at, first and foremost, your assets. What do you have that's of value to you? Is an expense of value to you? No. Is your cash that you have of value to you? Yes. Is the land you own of value? Yes. Is the accounts that you pay of value to you? Not necessarily. So we're going to go ahead and list out our assets. First, we have is our cash, and we have that at $13,210, a big asset that we have. We have accounts receivable, excuse me. These are all the people that owe us money. Make this just a little bit bigger. Accounts receivable is at $13,320. We have our office supplies. That's just nice and sitting in our office, which has got some value, $2,720. We have the land that we have our office on, which is worth $45,910 as of today. Again, this is as of this moment. We have office equipment that we own, maybe a copy machine. That's $17,350. And those are our assets. Looking at the rest of this, all of it's going to be a cost, all of it's going to be a liability for us in some way. So we'll look at all that in just a minute. Next, and just down here, this is just our total assets, right? The system will automatically just add all that together for you. You just need to know that that right there is your total assets. Liabilities, like I said, it can be really easy to go ahead and start adding consulting, rent, expenses, all these expenses together to make that liability. And yes, if we were making the equation all the way out and doing that as a separate activity, that may be stuff that you take into account. But specifically for our balance sheet, the liability that we're looking to add is something that we haven't used here yet, which is going to be our accounts payable. So we're going to add our accounts payable. Oh, can't type. We'll make this a little bit bigger. And our accounts payable right now is $7,970. And that's really it. We have our accounts payable there. Then we're going to go down to equity. Equity, again, kind of reminds me of the statement of retained earnings. We already talked about dividends, so we don't need to talk about it again. But the one that we haven't talked about on there is our common stock. Our common stock is what's owned and what's owned by our shareholders. And our common stock right now is at 83,390. And then, and this is when you have to look back, we're going to add in our statement of retained earns. So we're going to type in our retained earnings. This is a little bit bigger. And that was 1,150. Now this is going to be, so we take the left, we had our total assets. If you look on this right side, we have our total liabilities there and equity. Those two together. Let's make that a little bit bigger so you can see that. And as we learned in the reading, our assets should always equal our total liabilities plus equity. So if you look at these two numbers, they should be the same. If they're not the same, before you submit, take another look. These two should always be equal. If you've got all your assets correct and this looks good and this may be off, go back and check your statement of retained earnings. We used the statement of retained earnings in this balance sheet. If your statement of retained earnings is a little bit off, go back to your income statement. So each of these forms builds on each other and ultimately to get us our balance sheet and hopefully get your company accounting correctly. I hope this helped. I know it was really quick and went through. Remember, our income is really what's coming in minus what's going out on the expenses side. Our statement of retained earnings takes that net income and then subtracts any dividends that we're required to pay out to our shareholders. And everything else is a retained earning. It's something that we get to keep. And finally, we want to take a snapshot of everything that we have on our balance sheet as of today, which includes our assets, our liabilities, and our equity, which just takes into account everything else that we haven't touched. And remember, your total assets should equal your total liabilities plus equity. Thanks, guys. Hope this helps and look forward to continuing the discourse in the class.